All right, welcome everyone. It is the middle of the month. It is October 15th. Thank you guys for spending a little time with me today. It's just after 5 o'clock and we're going to be getting started here. So today we're going to be talking about like kind of the different things that happen that can affect your financial aid, right? We're going to be talking about kind of life events, okay? Now, the reason why we're going to be talking about this is because a lot of people unknowingly do things or are in a situation where they have to do something, but they don't really kind of think about the financial aid side of things. Okay. So we're going to be talking about that today, right? Again, if you guys can help me out by putting your students, grade in the chat, right? That'd be very useful. So I know that people are here, right? Obviously, we have a lot of seniors here today. So welcome, seniors, right? The one thing that I will say is that there's no rush to get to the finish line for your financial aid. Um, it is not a race, okay? The deadline for California is March, right? Technically speaking, right? But again, there's no reason to wait if things are in line, okay? You can turn it in early. Hopefully, you get responses back sooner rather than later, okay? But let's kind of go on and kind of like talk about the things. So, we're going to go over a little bit of financial aid news. There's not a lot out there right now, but as far as what we're going to be going over today, there's different areas like how does having siblings in college work? Like when you're selling stocks or assets, like things like that. How do all those things play into it, right? We're also going to be talking about kind of some other pieces of the puzzle as well, so we'll get there as well. Okay. Now, just a little bit about me. My name's Coach David, right? I'm a former law school and college admissions reader, and I've been working on financial aid for the better part of a decade and a half now. Okay. So I'm ready to help save your family money. Even today, I had about 8 consultations already. Um, Telling families, hey, there's different opportunities here, there, so on and so forth. So hopefully, I can find the opportunities for your family. Okay. Now, in the financial aid news situation, right? Um, Here is kind of what's going on, right? Like I just said a little while ago, every article that I've been looking over has said, do it as soon as possible. Funds run out. Funds do not run out. Do not worry about it. Okay. As long as you do it, excuse me, within the deadlines, you are going to be fine. Okay. Now, a little bit of an update on the lawsuit that I was kind of talking to you guys about, maybe about, I don't know, maybe it was about 3, 4 months ago, right? But there was a lawsuit that basically said that colleges and the College Board were colluding to lower financial aid, especially for families that have parents that are divorced or separated. Okay. Now, basically, what has happened, and obviously because I was a former lawyer, right? The federal court judge has dismissed the claim without prejudice. Now, what that means is that the judge is saying there's not enough evidence now, right? But I'm gonna leave it open so that you guys can bring this lawsuit back if you guys find more evidence. Okay. I will try to update you guys as soon as possible. I was hoping that this would actually go to trial so that one way or another we were able to kind of see what the results were. But again, it seems like we're gonna have to wait a little bit longer. Okay. Again, I'll try to keep you guys updated as much as possible. But again, things that come up at a certain time come up at a certain time, so we'll kind of figure out exactly what we need to do there. Okay, but stay tuned for any breaking news. Okay, now before I get into the kind of, give me 1 second here. Before I get into, something is ringing on my side. Let me see if I can stop that. Okay, perfect. So before we kind of get into the training, there is a quick message that I want to get out there. Now, I know that for seniors, this doesn't really apply to you anymore. But if you have younger ones, right, this does apply to you. And what I want to talk about is booking your free 15-minute assessment with our college admissions advisors, right? They can kind of pinpoint the different areas that your student needs help. They can kind of figure out if, what type of help you need and how we can provide you assistance with that, right? So if you guys have a question, right, for us, or if you guys want to set up that quick 15-minute assessment, please go ahead and, text book to 949-775-0865, or you can book it on your own by scanning that QR code. Okay. Now, we have programs for all grade levels. So whether your student is in 8th grade, 9th grade, 10th grade, 11th grade, right, we have a program that will fit your needs, right? The one thing I always tell families is, well, our price, the way that we kind of price things, it is a lifetime pricing. So whether you start in 8th grade, 9th grade, 10th grade, or 11th grade, the price is exactly the same. So the earlier you start, the more value you get out of things. So make sure to sign up for a call. Okay. Now, let's kind of get to it. We're going to be talking about life events, right? Things that happen in our lives. Sometimes we can control, sometimes we can't control, and how that will affect our financial aid. Okay. Now, there's a lot of different things that happen. Changes in marital status, selling of like the home, selling of stocks, siblings in college, inheritances, this, that, so on and so forth. There's just too many that I can't really go over them. I'm going to talk about the ones that are the most critical though, and that I see the most. Okay. So we'll talk about those and then we'll move on from there. If anyone has specific questions about a specific situation, obviously I'm going to have a link to book with a call with us later. We are also going to, you can also, we're also going to have a Q&A session so you can ask there as well. Okay. All right. So first off, you might be asking, well, why are these sorts of things important, right? And they are important because they are tax events, right? And when I say tax events, it means that there's changes or things that go on your tax return. Okay. And so when you think about tax events or life events that happen, the first thing that you want to think about is, does it leave a mark, right? And what I mean by that is, does it leave a kind of like a footprint on your tax return? Right? If it does, right, the financial aid offices are going to do anything and everything that they can to try to give your family less money or change your financial aid, right? But we're going to dive a little bit deeper into exactly how different things can affect your situation in the different categories, right? The first one we're going to talk about is marital status. Okay. Now, marital status can change in a lot of different ways. There could be a death, there could be a divorce or a separation or a remarriage, right? So let's talk through all these. Again, if you guys have questions, put them in the Q&A, put them in the chat so we can talk through them. Okay. Now, obviously, spousal death, right? If your spouse, passes, right? Then there's going to be a huge change, right? If both of you are working, there's going to be an income change. That is a tax event, right? There's no longer going to be a spouse on your tax return. That is also a change as well, right? It will now just be head of household. It won't be jointly filing separately, or what's it? Married filing jointly. Okay, so make sure that you understand how that is going to affect you. Now, this is one of the situations where it might affect you positively because obviously there's going to possibly be lower income, right? So that is a situation that you have there. For divorce, similar situation. Your taxes will now be separated. The question becomes, are the taxes separated in the year that is critical for your student? Okay. So for seniors that are applying now, right? So I'm just going to give you an example. For seniors that are applying now, the critical tax year that they're going to be looking at is the 2024 tax year, right? But let's say that the parents are getting divorced right now in 2025. Your 2024 tax return is going to show joint filed, like married filing jointly, right? But your current situation is not that, right? So there's different strategies around this and different ways that we can take this, but maybe we delay applying for financial aid. Maybe we go ahead and file our taxes early for 2025 so we can show them the new situation, right? But a lot of people are like, "Oh yeah, well I'll tell them about my situation in an appeal." The problem is that colleges don't really believe you unless you provide documentation, okay? So, documentation would be like the final divorce decree, right? Things like that. But the way that the courts are backed up, realistically getting an official divorce decree, it might take anywhere between 10 to, I don't know, 15 months, right? So again, we have to find other ways to kind of, do that. Separation. Separation is a little bit of a less extreme situation than divorce, right? It means that we're currently living apart. We're kind of trying to figure out what's going on, right? Now, the CSS profile doesn't really have a separation category. The FAFSA does have a separation category, right? So again, we have to be able to navigate those. And then remarriage. Now, remarriage, if both people are working, remarriage sucks, right? Because now it puts your income together, right? Again, let me give you a situation. There is a parent. They have a child. They are a senior, right? They were divorced, let's say 10 years ago, right? So again, they've been filing taxes on their own. But in the critical tax year, the 2024 tax year, they were remarried and they started filing jointly with their new spouse, right? Now, I don't know what the family dynamic is. I don't know if the new spouse is going to take on responsibilities for paying for college for, their stepchild, this and that, so on and so forth. But the problem is that if you get remarried and you start married filing jointly, your new spouse's income is going to be considered as part of the financial process, like financial aid process, right? So let's say that you make 100 and your spouse makes 100, or your new spouse, right? Then your income is now at $200,000. That's what they're going to be looking at for your student. Okay. So you have to think about how remarriage is going to do that. Again, we don't want to necessarily do it in the critical tax year. But again, I know that love doesn't wait for anybody. So if it does happen, it happens. We'll have to deal with those consequences. Okay. We're also going to talk about sale of assets. Okay. Now, again, looking back here, right, there are certain situations that are going to help your financial aid situation. There are certain situations that are going to hurt it, right? Same thing for like sale of assets, but for the sale of assets, usually it's going to hurt you, right? Why? Because it's going to increase your overall income for that year, right? Now, the most common one that I have seen is the sale of a home. Okay. Now, why is the sale of a home such a problemsome area, right? It is a problemsome area if you don't reinvest that money. Okay. Let me give you an example. Let's say that you guys are living in your family home, right? But your family has grown, the kids need their own rooms. You need to move from a 3 bedroom to a 4 bedroom, a 2 bedroom to a 3 bedroom, whatever the situation might be, right? So you guys sell your house, and let's say you sold it in September, right? Your new house was supposed to be ready for you to move into in November, right? But it wasn't, right? And so they said December, and then now we're in January, right? Here's the problem if you wait until the end of the year to reinvest that money into a different home, right? It's that you will now have to pay capital gains on the increase of your old home, right? Now, why is that bad? You're like, well, yeah, well, I'm paying taxes. That's a good thing, right? No, paying taxes is not a good thing. Well, at least I don't think it is, right? But the bigger problem is that the college is now going to think that you have some sort of investment, this or that, so on and so forth, where you're getting huge amounts of return because your capital gains are going to skyrocket, especially if you own a family, like a home in California, right? So, I mean, just as an example, you buy a house, you wait 3, 4, 5 years, right? The house value, like even my home that I bought 8 years ago, I think it's gone up like 40% in value, right? So if I sold it, right, 40% would be like what I get taxed on for capital gains, right? So they're going to think that I'm super rich, right? Because now that's going to get added to my income, right? In the critical tax year, you do not want that to happen, okay? Now, if you're planning on selling your home and reinvesting in another property, then I'm sure a lot of you guys know this, but there's like that exchange, right? I think it's the 403 exchange where like for like investment types of situations, you can go ahead and put your money in there and they won't charge you the capital gains. Okay. But if you're thinking about selling the home, putting it in your checking account and then traveling the world, we're going to have a little bit of a problem. Okay. So keep that in mind. The sale of stock. I always tell families, if you don't need to sell stocks during that critical year, please do not, because if you do sell stocks, then that money, again, capital gains, right? The one thing that I don't want to see, if possible, is capital gains on your tax on your tax filing. Okay, if at all possible. I understand there's situations where it's not possible, you have to take it, right? But I also understand that there's are voluntary things, right? So if you're like, it's hard to tell families not to do anything, right? But if possible, and you're just leaving it in there for long-term investment, then please, like, just leave it alone, right? Now, pulling money out of things is also going to trigger things, right? So let's say you pull out money from your 401k or your IRA or your investment accounts or this or that, so on and so forth. Those are all things that are going to be taxable events, okay? And so taxable events, it's going to add income to your overall tax return. We do not want that. Okay. Now, loans. Loans are a little bit different. A lot of people take loans from their 401k or from their life insurance policies or this or that, so on and so forth. That's not necessarily considered as income, right? So while, like, let's say that you have a life insurance policy, you're going to take some money out of it and take a loan on it, right? And pay it back later, right? That's fine, right? You should be okay. You should be in the clear there, right? But these are different instances that I've seen across the board where families have hurt themselves by doing one of these things. Okay. So keep that in mind there, right? Now, we're going to get to the multiple students in college, right? I already saw here, right? We have students that are twins. We have students that are like, there's already a kid in college. The next one is going to college this year, right? There is a problem. Let me kind of talk to you about what it used to look like versus what it looks like now. Okay. So in the past, before the FAFSA change for the class of 2024, the kind of the number that we got was called an expected family contribution. The expected family contribution was the out-of-pocket money that was expected that a family pay in order for a student to go to college, right? Now, let's say, so again, this is pre-class of 2024, but or actually it's actually about 2, 3 years before that. So it's like pre-class 20 of 2020, 2021, right? But before, how they calculated that EFC, right? Again, they have their own formula. They figured it out and they would pop you out a number. Let's say that number was that you needed to pay $30,000 a year to go to a certain school, right? Okay, understood. Maybe you got some grants, you took out some loans, and then the out-of-pocket cost is going to be $30,000. Now, let's say that you had two kids in college, you had twins going, right? What would happen previously with the old policies was that your $30,000 that you had to pay for one student would now be split amongst the two students. So now you would be paying $30,000 for two students. What does that equate? That's $15,000 a piece. If you had three kids in college at the same time, that $30,000 would be split among three students. So it'd be $10,000 a piece, right? Four, five, six. Again, you see where I'm going with this. So the EFC would be split amongst the number of students that was in college at that time, right? Now, let's come to modern day because unfortunately we cannot travel to the past, right? What does it look like now? Let's say that your EFC is $30,000 or your they call it the SAI now. I don't know why they change these names. Like they're acting like it's an upgrade, but it's not an upgrade, right? It's just exactly the same thing. They changed the name, right? But let's say that the student aid index, which was the old expected family contribution, was now $30,000, right? Let's say that you have twins in college, right? You would think, okay, well, my out-of-pocket cost is $30,000, and so if I have two, well, okay, it should be less, right? Unfortunately, right, especially at the UCs or CSUs, where a lot of our students go, right? That is not the case anymore. What actually happens is that your student aid index or the amount of out of pocket that you should be paying is now $30,000 for student one and $30,000 for student two for a total of $60,000 a year. Okay. Now, there's probably a lot of families out there right now. They're like, what the heck? Why did they do that? This and that. I don't know. I don't create the system. I just work within it. Right. And there's probably a lot of people that are saying, well, that's not fair. And my answer to you is I agree, right? Unfortunately, that's the way that they are doing things now, right? So if you have three kids in college, it's 94 kids in college, 120, so on and so forth, right? So how will this affect families? Unfortunately, there's no more discounts anymore, right? When it comes to state schools, right? So it doesn't matter if you're going to UCs, if you're going to University of Michigan, Virginia, Wisconsin, Washington, Texas, the SAI is per student, okay? Now, the other part of the puzzle that or the kind of the other side of things is like state schools, and then we have private schools on the other side. Now, I've said this religiously over and over again, right, since the policy has changed, but private schools do care a little bit. Okay. So if there is two students in college at the same time, they do take that into account and they actually give you a little bit more, right? Now, when I say a little bit more, I'd roughly say that it's somewhere in the range of 7 to 15% more in the year that another student's going to college. Now, is it like cutting it in half? No, it's not. But is it better than nothing? Yeah, it's better than nothing. Okay. So something to keep in mind there. Okay. So I'm sorry, but the student or the parent that has twins, right? It's going to be that price per student, right? And I know that there was another family where there's a kid already in college, the other one's going the second year. There's not going to really be a big thing if both of them are going to state schools. Okay, so keep that in mind, right? So, quick takeaways here, right? The first thing is anything and everything can affect your financial aid. So, before you make a move that's going to affect something on your tax return, you do need to understand how it's going to affect it, right? So, it's better to be prepared than surprised, right? So, I'm giving you that warning now. Anything that affects your tax return will affect your financial aid, right? You also need to make sure that you understand what the critical tax year is for your student, right? For seniors right now, it's 2024, right? For current juniors, it's 2025. For sophomores, it's 2026, so on and so forth. Okay. But you need to try to avoid as many of these things as possible during the critical tax year so that your financial aid doesn't get cut. And then finally, right, you guys have been flooding me with consultations over the past like 3 weeks, which I really enjoy because I like talking to families and seeing if there's possibilities for them, right? But right, ask questions. That's why we're here, right? So if you get a text from us, ask a question back. We'll answer, right? If you're in our Facebook group, you can go ahead and message me on Facebook, right? If you're already in our coaching program, right, go ahead and reach out on Discord, right, asking me the questions that you have. Okay. But the only way to understand your situation is to ask questions and for us to go over it together. Okay. So consultations are important. Again, our consultations are free. I never charge for them. Come sit down, let's talk a little bit and figure out if there are opportunities. Okay. Now, I keep going over this because I don't want people to miss out on things, right? But the timeline, right? We're already here, basically, right? We're in the middle, right? Basically, I want people to think that everything needs to be done by like the end of the year, right? There's very few schools that say their deadline is after the end of the year. So roughly that's when you can think it's done, right? Now, the posted deadlines for early action, early decision schools, uh, they're there for a reason, and I'll tell you what the reason is. They're there so that they can give you a financial aid award by the time you get your admissions decision. But if you don't mind getting a little bit later, there are strategic reasons why you might delay turning in things to a certain school, right? And that's something that we can talk about during our consultation based on the list that you have, right? Now, obviously, between December and April, the schools are kind of figuring things out, trying to, decide who they're going to accept and the financial aid awards. And then by April, you should have all your things out. But for most families, think that things need to be done by the end of the year. Okay. Now, one of the things I always said was ask for help. So whatever way it is, please reach out to us. We are here to help, right? And if you guys do have questions, start typing them in the Q&A or in the chat because we're going to get to Q&A pretty soon. Okay. Again, we go over these results every time, but they're pretty awesome, right? This family makes over $300,000. I got them $30 to $40,000 at different schools, right? This family, they make over 400. I got them $40,000 at BU or like Baylor, right? And this family, just over $230,000, but I was able to get them around 30K out of UC. Okay. So keep those kind of things in the back of your head. I will tell you more in depth what I can save you when we get to your consultation. Okay. Now, if you guys do want to reach out to us, right, our phone number is 650-860-5201. All you have to do is send a quick text there and put in money. We'll go ahead and our team will reach out to you to set up a time for you. Okay. There's also a QR code here that you can scan. Okay. Now, here's the reality of what my schedule looks like. I blocked off a lot of time because I need to work on financial aid. I need to talk to families, do all these different things. So if you go onto my actual kind of like QR code here, you're probably going to find that my next available appointment is in November, right? So you guys can email us, right? If you guys are looking for a spot, you can text us, and then we should be able to find you a time that is faster than that, much faster. Okay. So if you guys want to email us, I'm going to put it in the chat so that you guys can have it, right? It's just financial aid at egelloC.com. Okay. So if you guys want to go ahead and email me and find a time that works, right? That might be a quicker option for you than using the QR code or trying to do it on your own. Okay. So I'll put that in there a couple times so you guys have it. So we're good there. Okay. But I did want to open it up for Q&A. So if you guys do have questions, please make sure to ask them in the Q&A or in the chat, and then we will go over them. Now, unfortunately, I have a little bit of piece of bad news here, right? And the bad news is that we did have a special discount going on for the first 10 families that signed up for the financial aid package. Unfortunately, that's gone. 10 families already signed up over the last, I believe it was 2 weeks, right? So they've all taken all those extra discounts. So that's not available anymore. But I'll see what I can do for your family if you do sign up, right? But I won't be able to offer the extra $500 off, unfortunately. Okay. All right. So if we have questions, let's go ahead and put them in the Q&A and in the chat, and I'll wait for those to come in. All right, we have our first question here. It says, my husband is 25% owner in a small business with only 4 employees. As I understand it, he does not have to claim any net of his business. He doesn't have to tell us, it's a little bit of a complicated question. So if he is a 25% owner in the business, uh, how is the business set up? Is it set up as I'm guessing it's either an LLC, it's probably not an S corp if there's other partners, or it's a C corp. But how is it set up? LLC. Okay. So the LLC, because it is a pass-through entity, and I believe maybe you are in California, um, the income that he receives from it is going to be passed through to your personal taxes. So, oh, in Kentucky. I'm gonna have to check on that specifically, but most states are pass through, right? So if like let's say that the company makes $100, your husband is 25% owner, so he gets 25 bucks at the end of the year, right? So okay, that is income that's gonna be on your personal taxes if your state is a pass through kind of state, right? Now unfortunately, there's no way to hide the income on your personal taxes. But what you can not, where what you do not have to tell them about is your business assets, right? So if your business has $1 million, I don't know, machine, you don't need to tell them about that. Other assets like that, business assets, right? Um, but the income, unfortunately, because it is on your tax return, right, on your personal tax return, there's no real way to hide it per se. Okay. So hopefully that answers your question. All right. Other questions, concerns? Okay, so we have a little follow-up. It says the business did not actually pass on any profit. It was all his own personal income. Okay, well, yeah. So if the business is not making any profit and it's at zero or it's at negative, well, if it's at negative, it's a positive for your tax return. If it's at a zero, well, then it's not going to have any effect, right? So just because you have like again, if whether there was like cash flow or not, if the end result is zero, right, then you shouldn't have to worry about it. Okay. All right. Any other questions or concerns? All right. I am not seeing any. Okay. I'm going to leave this screen up for a little bit so you guys can take a picture or get the phone number, right? But we are here every week. Next week, most likely, I'm going to be going over the CSS profile again so that families can understand because it's kind of time to start filling things out. So if you guys do have questions or topics that you want me to talk about, please email us or send us a text so that we can try to incorporate those things in. Okay. But thank you guys for spending for a little time with me here today. I'll leave this screen up for just a little while. And then if you guys have any other questions, please reach out to us, okay? All right, everyone have a great night. It was raining until yesterday, but it's not raining anymore where I am. So that's great. Enjoy the rest of your week, and then we'll talk again next Wednesday, okay? All right, everyone have a great night. Bye-bye.